Hey guys, welcome to the podcast. I'm Dr. Shamim Nazir. I've been an ER physician for over 24 years, and now I'm a real estate investor. Today I have with me Dr. George Ozoude. He's an orthopedic surgeon here in Houston, Texas, and he's also been investing in apartments for almost 10 years. So today we're here at one of the sites that he's invested in, and he's going to show us around. So George, good to meet you.
Good to meet you in person. I know we've chatted
on the
for
phone.
years now, and it's our first time to finally get to meet. So this is awesome.
This is really great.
Glad to have you
So
here.
tell us where we are.
So yes, we're in the Galleria district of Houston, Texas. It's a very famous, well-known area with a lot of retail economic activity, a lot of commercial activity, and obviously that means a lot of residential activity. So we're here at one of our acquisitions in partnership with Disrupt Equity and Time Health Capital. So happy to have you guys here and show you guys around and explain a little bit about the asset.
Yeah.
Since 2016, that was my first investment in the first real asset. Since then, I've gone on to invest in over 25 deals as a limited partner and 4 deals as a general partner.
More about yourself.
Yeah.
Now, you're an orthopedic surgeon, clearly a very, competitive field in and of itself.
Yes.
So you're at the top of your game, and now you're a real estate investor and so active in that. So what made you want to get into all this?
So yeah, I'm in orthopedics and I love it. It's a great specialty. I've been doing it for 15 years now. I have my own practice. I've started my direct orthopedic cash pay practice for going on 3 years now. And I love it. I still take part of it in it full time. Obviously, that's a business in and of itself. It requires a lot of my time. I see myself doing it for a long time. In fact, the reason that I've gotten into investing is because of my desire to have my own practice and practice free from any restraints from insurance companies. I knew in order to do that and create that reality, I needed to create passive income streams. And so I looked at many different avenues from stocks to, venture capital. And then what I really settled on was real assets and particularly real estate. And that's when I started this journey into real estate investing. And there was a moment where I thought I had to do it all myself. And I quickly realized that wasn't possible, scalable. Learned about syndication, learned about partnering with other groups, other like-minded folks who have the same goals and who have different strengths that complement my strengths. So that's kind of how I've been able to do it, that's how I've been able to balance both. Time Health Capital is the name of the investment company, and Movement Orthopedic Institute is the name of my private practice. In the beginning, my practice was so new and I knew so little about growing my own business that I found myself actually spending more time in that than in real estate. But now that I've gotten a little bit more control, I've hired an assistant, offloaded some burdens that I can kind of split a little bit more time with real estate and looking for deals, talking to investors, educating a community of physician investors and healthcare workers. So now it's starting to balance out a little bit more. Say I'm spending 80 hours a week, split between both of them. So
it's 2 full-time jobs.
Yeah, it's like 2 full-time jobs.
Yeah.
So, but when it's your own, it's different, right? It doesn't feel like it's the same type of work as with the typical 40-hour work week.
Yeah, and you touched upon the market. I hear a lot of scare, from investors that the rents are stagnating.
Yep.
What do you see in the market as an active investor?
I think if you pay attention to the macro, you can kind of understand what's happening. So the stagnation in rents totally makes sense to me. And in fact, that creates an opportunity like this because rents weren't growing fast enough to support the rising interest rates and the increased expenses that you have to meet in order to keep a property like this. It presented a buying opportunity. And that is totally understandable considering how much was being built back in 2021 when interest rates were 0. Mm-hmm. And immediately after that, all the buildings stopped, all the new builds stopped, and because of interest rates went up. And we foresee in the next year or two, the reversal will happen. See a lot of upward pressure on rental rates because there are no new buildings that are coming on in this area and many major metro areas for the next 2 to 3 years. So it's all about knowing the trends and really knowing that there's a lag effect. So what happened 3-4 years ago impacts your investment today. And so if you keep that in mind and kind of can make sense of kind of what's going on in the current situation.
So here we are at the pool, and we were talking a little bit about the CapEx.
Yep.
So this is a classic value add model, right? Where you're buying a Class C apartment complex and then adding value and then hopefully increasing the value of the overall property. So tell us a little bit about that model. That's, I think, is that typically what you guys look for?
Yes, it's the prevailing model. It's not the only one, but yes, anytime we're acquiring something, we always want to see if there's a value add component to it. That way we can force appreciation. And it's harder sometimes in certain economic markets and locations to actually build a brand new property. It's easier to go in and take an existing property and upgrading it to something more modern. And that's the idea of that value add business model. And that's what we're doing here. We can still add things like grills or space for dog parks. So there's a lot of little courtyards in this footprint because it's very wide. And there's a lot of green space that we can just kind of create fencing around and add more dog parks and more sitting areas. And that's how you add value to the community. And of course, you can go inside the units, take out any old cabinets, take out any old flooring, upgrade it, given that modern look, that modern feel. And so that's an interior value add components. And like I said, in 2 to 3 years, we may be rolling that out as well if we see that the markets are demanding more of a newer, fresher look. So,
and then in addition to just appearances, there is a value add of management and those types of things, and increasing occupancy. Did you have a component of that in this as well?
With our team here, they actually have in-house property management that they manage all of their properties across the Sun Belt. And so they're bringing that expertise in order to come in and give a boost to marketing and bringing in quality tenants. As we know, Houston and the rest of the major cities in Texas seen a lot of influx from the coasts. And so if your property management team is aware of that, they can cater to that. They can understand what those tenants are looking for and figure out how to bring in the best quality tenants. We also have a strong asset management team that can lower expenses. So figure out areas where we're paying too much for certain vendors. You can get kind of discount pricing because you are working with them again and again on larger projects. So drive down expenses is another form of forcing appreciation and adding value.
Yeah. So one of the things he's talking about is regular appreciation of the property with the market, and then there's forced appreciation by adding value or improving management and all those kinds of things. So that really accelerates the overall appreciation of the property and increasing your NOI or net operating income. I want to talk more about physicians in investing and real estate. What is your advice to other physicians who are maybe looking to do what you're doing now?
Yeah, I would really advise my physician colleagues to just really stay curious. Know that we are all kind of experiencing some of the frictions of the current medical landscape. And I think there's a lot of opportunity out there if you remain curious and open to other sources and other ways of practicing medicine. And, for me, that meant finding alternate streams of income. I can actually leverage my MD in many different ways in order to get additional sources of income. And so that would be my biggest advice, is just to stay curious. It's hard because we're so busy and overworked and tired and we don't have time or bandwidth. Start getting creative with how you free up your time. And that way you find these little pockets to maybe learn something from a new podcast or go to a meeting, a meetup, and network with other like-minded folks. And that way you start kind of seeing what these are, and you just start getting excited, and that starts serving itself, and it'll grow into something.
Yeah, and I think it's so important to talk to people like yourself who've been doing it, and that's why I love bringing you guys to light and sharing your stories, because I think physicians a lot of times just don't think that they can do it. I'm too busy. I've got too much else on my plate. And they've spent a decade or more specializing in something. They earn a decent living. Why bother?
For sure. I've heard that so much, is I don't know how to do anything else.
Yeah.
And I get it. We've dedicated so much to just doing what we do. But it's possible, if you really learn how to be creative with your time, you can start learning other skills. So
Yeah, because I mean, we're obviously a good bunch, right?
Yes.
We know how to apply ourselves and
Yes.
learn things, and it's just important to stay curious, like you said.
Curious.
And it might be different for each person. It might be real estate, it might be something else, start your own business, whatever it is. But I think it's so important to just think outside the box and create alternative avenues for not just income, but just our own self-expression and,
Yes.
expanding our horizons.
Yep.
It's so important.
100%.
So thank you so much, George. This was so exciting. It's a beautiful property, and I'm so excited for you and for your company and then your medical practice as well.
Absolutely.
And very excited to, get to know you. And I hope you'll come,
Likewise.
we'll continue this conversation and
Likewise.
see how the project's going.
Thank you so much. Thanks for having me.
Yeah, absolutely.
Yep.